we will open the floor for Q&A. In the third Q, we recorded top-line growth of 9%, despite some operational disruptions caused by the protest from late August to early September, which affected the mall's consumer traffic. The triple SG improved, driven by stronger performance in the active segment, mainly coming from the successful back to school and the Independence Day promotions. In the quarter, as you can see, the F&B segment also delivered its first positive top-line growth since the boycott, reflecting early signs of recovery from low base last year. Meanwhile, the digital segment normalized after the peak during the iPhone 16 launch in April this year. Fortunately, we were able to launch iPhone 17 in the mid-October this year as scheduled, which we received positive response from the customers. The GP margin, as you can see, was 41.4% due to lower GP margin in the active segment. Meanwhile, our OpEx to sales ratio slightly improved to 33.2% on the back of efficiency improvements and steady top-line growth, resulting in the EBIT growth of 12% year-on-year with a margin of 8.3%. In terms of expansion, we opened a total of 394 new stores in the 9 months, mostly coming from the active segment. By country, the majority was still coming from Indonesia. In overall, our results of 9 months 2025 were broadly in line with our expectations. Coming to inventory, the aging inventory slightly went up to 28%, but remains below our internal threshold of 30%. On a positive note, our inventory days have come down to 136 days, in line with our full year 2025 guidance. I think that's all for our brief highlights, and now we can proceed with Q&A. Back to you, Emmy. Thank you.
Okay. Thank you, Bu Rati, for the concise presentation. We'll begin with Q&As. Again, to participants who just joined, as a reminder, please type in your questions in the chat box, or you can chat or email me directly, and we will not be taking direct questions to save time. Okay, so to begin, I have a few questions. But first, on your SSSG, we see recovery in Mapa and Boga to positive figures, but the specialty SSSG is still flattish, meaning fashion primarily is still down year. And in general, do you see that this improvement continues after September?
So maybe I'll take that, Bu Rati, as well. I think if you look specifically in Indonesia, right, we have been modeling along a little bit for a year. I think in the third quarter, we saw a little bit of green shoots, like you already highlighted in particular areas. In October, that is continuing, but I wouldn't call it a full recovery from what we saw in previous years as well. So definitely there's no deterioration in the fourth quarter, that's for sure. And again, we see certain areas improving, but still, I mean, we're doing like-for-like growth in the low single digits. That is not something, of course, that we would be comfortable with in the longer term as well.
Okay. And then earlier in the year, we discussed that 2025 is all about consolidation, especially in Mapa, instead of hyper expansion. So how has that improved your operational metrics or your balance sheet health per se? Or maybe if you can share the percentage of stores that are profitable now versus non-profitable.
Yeah, if you look at when we talked about consolidation, it was primarily in the international markets. It's not only from Mapa, actually, it's throughout the portfolio of MAP. So definitely we have seen improvements there. If you look at the inventory days, of course, they have come down significantly within the international markets. Of course, because Indonesia is still a little bit weak in terms of demand, overall inventory days didn't come down that much. But definitely multiple operating metrics actually within the international markets have been improving. Part of that is just due to the fact that in the period of hyper expansion, there will always be some execution issues, and now we have been slowing down. We see improvement in execution as well as some of the key metrics that you highlighted.
If I may add, Miguel. Actually, when we look at the Map Active as well, when we look at the OpEx margin, we really saw the improvement in the third Q, because we also saw that it was quite a bit high OpEx margin of 36% in the second Q, and first Q was 36.4, and we had 32 percent OpEx margin because of the stronger top line growth as well, and efficiencies, like Miguel is saying. I think international, it's a progress. We're still doing it, but we saw lots of improvements, I would say.
Okay, understand. And then you mentioned earlier, Bu, about the impact of the protest. And it seems that the local sales was minimally affected by this, if we see the SSSG. So what were your strategies there? And also, do you see this as just as a short-term improvement, or you've seen that economic situation has particularly improved after third quarter? We also get that question in the chat box.
Yeah. Miguel, if I may.
Yeah, I think sure. I think in terms of the protest, it did not minimally impact. It did actually impact us quite a bit. Our same-store sales growth would have been a lot better if this protest wouldn't have taken place, clearly. And it was not just for that couple of days, but it was actually really for a full 2 weeks or even longer than that. That our same-store sales growth was impacted. So in that sense, we would have been better if, of course, the protest wouldn't have taken place. Like I said before, there is a little bit of improvement, and there are some green shoots, but I wouldn't say that the Indonesian economy is completely back to where we would like it to be, for sure.
Yeah. And I'd like to add that I think we are quite fortunate that, being diversified, we are able, as I mentioned, that we're able to launch iPhone 17 in the mid of October, and that's actually definitely would help with the top line growth.
Okay. And then my next question is regarding your gross margin and inventory days, because your gross margin is somewhat flattish, or on a year-on-year basis, it's down slightly, around 50 basis points. Your inventory days have also normalized, but your aged inventory was up. So can you share what's going on behind that number?
Yeah, so specifically for the active division, where the majority of inventory is coming from, together with the digital business unit, we are a little bit higher than we would like it to be. Definitely, the third quarter has helped us quite a bit to improve the health of our inventory, both from a overall days perspective, as from getting rid of some of that aging inventory as well. We're not completely where we would like to be. So I wouldn't expect in the fourth quarter our gross margins to shoot up, but we're quite comfortable with the guidance of maintaining gross margins at the levels that they were last year. Then from the other SBUs, of course, this year it's a little bit different than it is last year, because last year for the digital segment, we didn't have the launch of the iPhone, right? The launch of the iPhone was actually postponed until April this year, if I'm not mistaken. Of course, for that launch, you're generally building up inventory as well. And just generally, the inventories were a little bit higher. But specifically for active, which is again the main driver of our inventory days, we are improving, specifically in the international markets. But we still have a little bit to go in order to get to levels that we're fully comfortable.
Okay, understood. And then speaking about domestic market, can you share the regional performance? Because we do understand that Java generally has a weaker consumption pattern than outside of Java. If you can share a little bit on that.
Yeah, maybe I can refer to Borati for this one. You have the detail.
Well, as you can see from the screen, that because of our target market is actually middle and upper, so naturally Jakarta has got the biggest contribution. And although some of the areas, as you can see, like Sumatra, now the contribution is 6%. Before it was 3% or something, or even Bali is in fact improving from 3% something to 6%. But this comes gradually, but our main target market is actually reside in Java, or specifically in Jakarta, in terms of growth, because in majority of the stores, it's also located in Jakarta and Java. So naturally, Jakarta and Java is still quite strong. Although, as I mentioned, that when we had the protest, Jakarta is badly impacted. As Mikael is saying, if we didn't have that, probably, we could have achieved higher. Although we're not complaining about the top line growth, because it's actually still in line with our expectation.
Okay, I understand.